And welcome to Sullivan Smart Sense. I'm your host, Heather Sullivan. We are joining you every Tuesday at this time to help you find ways to save money, to make more out of your money. We want to help you through these really hard, high inflationary times. And today we're going to talk about filing your tax return to really make sure that you're maximizing what you are qualified to get in terms of credits and everything else for your tax return, because that's money that you can then use to help you get through all of these higher prices. We know so many households are really struggling with a lot of higher prices, higher rent, higher gas, higher utility bills in some cases. And we really want to be sure that we're helping you to get as much money as you can out of your tax return so that you have a little more money in your budget to take care of things, or other ways that you might use your tax refund to put it to good use, to kind of set yourself up financially. We're going to be joined in just a moment by Ed Gardner. He is a certified public accountant. We're going to talk about what's new and different this year when filing your tax return. And we'll also take your questions. So I invite you, please go ahead and send your questions down at the bottom, and we will do our best to try and answer those questions. So if you have any tax questions you just kind of don't know what to do about, just put those below and we'll try and get to those. First, I want to talk, though, about how to get some free help filing your tax refund, right, tax return. If you make $58,000 a year or less, you qualify for free assistance to help you file that tax return. And so I want to show you, there are a number of sources that you can turn to. There's VITA, that's the Volunteer Income Tax Assistance that is through the IRS. The AARP, they have free help for tax preparation. Baker Ripley offers free help for tax preparation. Entergy Texas is also doing this. They partner with VITA as well. And then also, if your adjusted gross income is $73,000 or less a year, you qualify for Free File. And that is free access to software to file your tax return. And why you really want to be sure that you're looking into these options if you qualify is because whether it's the software or the tax preparer that's helping you, they will help to ensure that you get the credits that you're qualified for. We know 1 in 5 households that are eligible, for example, for the earned income tax credit don't end up claiming it. That's money left on the table. And we're talking sometimes about a few $1,000s. So it can really help a lot of people out there. We want to be sure if you're qualified for these things that you are taking them. So let's bring into the conversation. This is Ed Gardner. He is a certified public accountant. Thanks so much for joining us, Ed. It's great to have you with us.
Thank you for having me.
Thank you. Okay, well, let's just dive right into it because we've got some changes this year. And I think one of the biggest ones is the child tax credit. So we know families were receiving monthly payments starting back in July through December, a few $100s per child. And then they now need to claim the rest of that credit. And I want to point out, by the way, because I printed this for a story that I did on it. This is the form that people want to wait to receive. It is form, I forget the number. I'll get the number. I think it's 6419. 6419, you're going to get this in the mail. It will show you what you have already received from the IRS for that child tax credit. You want to be sure those numbers are going to match what you end up putting on your return. But let's talk, Ed, about what that credit is and what people need to know about sort of claiming the rest of it on their tax return.
Well, Heather, when they get that letter, they're going to get one for the husband and one for the wife.
Okay.
And so they have to remember that they split the number up. So if you got $2, each one's going to show $1. So there was a chance for people from July through December to get advance payments on the credit. But something that they need to do is they need to reduce the amount when they do the return. And a lot of people are going to make mistakes on that. It's the form 8812. And whatever they got, they need to reduce the credit amount, because if they don't do that, IRS will end up rejecting their return. And then it's going to have a delay if they're eligible for any type of refund, because they get a larger credit for a child under 6. And then they get a credit for a child from 6 to under 17. And so it's important, again, that they adjust the Form 8812 for the advance payments that they got.
We really want to talk about heirs for a minute too, because I interviewed a representative for the IRS recently. They still have 10 million tax returns that they are behind on from the last couple of years.
Right.
And so, yeah, they really emphasize accuracy is king. And especially filing electronically, if you can too, is king, because that reduces the need for a person to spend time on your tax return, and that can help to make sure that it expedites getting your refund and things like that.
Well, what I recommend, first of all, is double check all your figures. Maybe once you finish it, put your return down and maybe look at it the next day. But not only the numbers, you want to double check your Social Security numbers, because a lot of people will transpose numbers. IRS prefers returns being in whole dollars. So $1 to $1.50, write down $1, and $1.51 to $2, write down $2 on the return. Because the majority of people who make math mistakes, not only do they transpose numbers, but then you have cents on the return, and they accidentally create it as whole dollars.
Okay. And then there's also, in addition to the child tax credit, we started talking earlier about there's a dependent credit as well, right? What do people need to know about that one?
Well, that's the Form 2441. Taxpayers may both, first of all, you have to have both spouses working to get it. And you may have children that are in a daycare center, or maybe they have someone watching them. Well, on the Form 2441, you're going to need to put down the care provider or the place where they went, the address with zip code, and either their federal ID number or their individual Social Security number. And then you're going to need to put down the amount that you paid them. And something important too, sometimes people may have an employee benefit from an employer where they can get reimbursed up to $5,000 for dependent care. So on your W-2, you want to look at, I believe it's box 10, that would show the dependent care amount that you got reimbursed from your employer. And you need to put that on the 2441 as being reimbursed, because then you cannot take the credit on that amount. And the credit's on a sliding scale. The more you make, the credit can go down.
Okay, good to know. And then let's also, because another key one for families, especially lower income families, is the earned income tax credit. That's the one where 1 in 5 households are still leaving this on the table when they really shouldn't.
Right.
So can you talk a little bit about that, the earned income tax credit, and how people make sure that they get that if they qualify for it?
First of all, I use the analogy of the old roller coaster at Astroworld. When you earn up to a certain amount of money, you could possibly get the maximum. And the more money you make, it slides down to where you're not eligible. And it's actually payments that are given to someone who is in a low income bracket. And you get different amounts on the earned income credit depending on how many children you have. And if you look at the second page of the 1040 where you sign, I believe it's on line 27A. And of course, you can always go to irs.gov, and you can go to their forms and go to instructions, and you can go and get more information on the credit.
Okay. Well, let's talk a little bit about last year. There was another stimulus check that went out, and but if people didn't get that stimulus check, or maybe they didn't get the amount they were expecting, this is the time they can claim that on their tax return, right?
Right. In fact, on the second page again where you sign, I believe it's line 30, where it's called a recovery rebate. And last March, you might want to look if you had it direct deposited, or look to see if you received a check from the IRS. Now, the IRS did send out letters reminding people on how much they got, but you could have had someone who was born during the year, so you didn't get any recovery rebate on that, and some people may miss that. And then also, the more money we make, maybe people made less money in 2020 and they based the amount that they got, but this year maybe because things have turned around in the economy, both spouses might be working, they might be making more. And again, using the analogy of the roller coaster at Astroworld, the more you make, you may hit a point where you're not eligible to get any of that. But again, I believe that's line 30 on the second page of the 1040 to be able to possibly get that if you did not get the rebate.
Okay. Let's move on down the list. We still also, but we also, again, have this year, this kind of additional charitable tax credit. So if you make a contribution for a charity, even if you do the standard deduction. So tell me how this works and how much we can claim.
Well, if someone is single, they can get up to $300 in addition to the standard deduction. And they changed and increased it for 2021 that if you're a married couple, you can get up to $600 deduction for charitable contributions. And again, that would be on the second page. Actually, it's on the first page of the 1040, where just below where you have the standard deduction figure.
Okay. There's still time if you want to make a contribution to your IRA, right? And that can help to cut down your taxes, right?
Right. In fact, this year, our return is not due by April 15th. It's due by April 18th. There's a federal holiday in the District of Columbia on that Friday, April 15th. So we have to April 18th. And you can actually possibly make a contribution to your IRA. And the reason why I say possibly, if you or your spouse are in a 401k at work, the more money you make, you hit a point to where you're not eligible to deduct an IRA. But again, if you are eligible and you do make a contribution now in 2022, you can actually take a deduction on your tax return for 2021.
Okay. And there's some energy credits, and I think a lot of people are probably not aware of these. I'm probably not even that familiar with them. So what are some of the energy credits that people want to be mindful of?
Well, maybe last year in improvements on your home, you got a new AC, you did insulation, you did the double pane windows, you did a heater. These items, there's different amounts, but you could get up to 10%, up to $500 tax credit. And tax credit is like you paying Heather more income tax in. So that is on another form. That's on the 5495 form.
Okay. You know, I know I hadn't planned to ask you about this, but I saw something recently. A lot of people, sold their houses for big profits this past year. Do you have any thoughts on, I guess the best way to handle that if you did have a significant profit from selling your home?
Well, the IRS, of course, when you sell a home, it goes through a title company, and the title company is going to ask for your Social Security number, and they're going to report to the IRS. Let's say, Heather, that you sold a home for $250,000. So they're going to say you received that. Well, the rules say if you're in a home 2 out of 5 years prior to selling your home, and you live there, it was your primary residence, a single person can make a profit of $250,000. If you're married, you can make up to $500,000, but you need to show that on the return, when you bought the house, when you sold it, what you sold it for, what your original cost is. And by the way, if someone does make a little bit over $250,000, don't forget that you can do the closing costs, both purchasing the home and also the closing costs selling your home. And maybe you need to go back and remember the things you did to your home. Maybe you put in a new AC unit, a new water heater. Maybe you put up a roof. Maybe your spouse had you redo the kitchen, the bathroom. So instead of the house costing the original cost, you added more money to it. So that goes into the extra costs of your home.
Okay. One of the tricky things I think for a lot of people is choosing a good tax preparer. And you want to be sure that you've got someone who's really trained to do this. Because I think there's always an issue of, maybe some people, hanging a shingle that shouldn't be. So what are things that people should be checking out when they are hiring a tax preparer?
Well, one, I recommend that you utilize someone that helps people year round, and they don't just do this as a part-time job for 4 months out of the year. You also might ask them what training they've had, and if you're in a particular industry. In fact, I recently gave a presentation to some realtors. So are they familiar with their type of business, so that that they know the different type of deductions you have. Maybe someone in law enforcement that does side jobs, what expenses can they deduct? What can't they deduct? What extra benefits can they do, with it? Because there's too many times I've seen people that come out of the woodwork, I hate to say, just during tax season to generate a few extra dollars. And like you say, the earned income credit, they weren't aware of that, or they didn't know other deductions that changed in law, because the tax law changes every year.
Right. Do you need to represent you if you do get audited, if you have a problem?
Well, that's something that you can ask. Most people will charge, an extra fee, if they go represent someone. There are some companies that have what are called audit insurance, and that, to me, they know statistics. There might only be a handful of people, and that's a way for them to generate some extra income.
Okay.
And what's important is you need to keep your receipts. You need to keep your records. If you ever get looked at by the IRS, they're going to want to see the backup to how you came up with professional dues, subscriptions, how you came up with office supplies, whatever the expenses are. Now, someone who is a W-2 employee can't deduct out-of-pocket expenses. But if you're a contract person, you can deduct the out-of-pocket expenses.
That's that work at home question I'm sure you're
Right.
getting a lot, right?
Yes.
Okay.
Unfortunately, our elected officials, when we had the pandemic, that was brought to them by the American Institute of CPAs to allow people to deduct it that are W-2, but they never put it into the tax law.
Okay. What kinds of things should we be pulling? What papers, what documents do we need to start gathering? Because I think that's always the first step, even before you sit down and look at this, is to get ready.
Well, what I recommend you do is pull a copy of your previous year's tax return and maybe go through it and make a checklist of different things you had. Where, hey, I have W-2s. Maybe you changed a job, your interest income. Maybe you went from ABC Bank to XYZ Bank. And so you may have statements from both. You need to look to see if there's any type of carryovers. You could have had some business loss carryovers. You could have had stock loss carryovers. So you need to look at those type of things. And again, take your time, double check not only your Social Security numbers, but double check the numbers when you prepare your tax return.
Okay. Those were my questions. Is there anything else you want to add that we didn't cover, Ed?
I think you got the basic things, and I always like telling everyone many happy returns.
Excellent. Yeah, you want people to be happy too about getting all this done. It's good once you get it, feels good once you get it all done.
If I could bring up one more thing is
Yeah.
Even if you owe, do your return early so that you know how much you owe. And if you're going to get a refund, then of course you want to get the money as soon as you can. And by the way, you can either have them mail you a check or you can have them direct deposit it to your bank account. But I recommend that you double and triple check your routing number and your account number to make sure that you put that correctly on your tax return.
Absolutely.
And I have found people that wait till the last minute. They rush. They might make math errors. They also might transpose numbers, and they also might not get all the tax deductions that they're eligible for. So work on your return early is the biggest advice I can give you.
That is fantastic advice. And Ed Gardner, local CPA, thank you so much. We really appreciate having you with us and all of your insight. I know you've helped a lot of people and a lot of families make sure that they're going to get all of the credits that they are qualified for. So that'll hopefully help them make ends meet a little bit better this year. So we really appreciate you being on the show with us.
Well, thank you for having me.
You bet. Okay. Just to recap a little bit, again, a couple of things to go over. If you need some help with your tax return, I want to show you again. This is some ways. Oops, this is some ways. This is what happens when you're your own producer. Some ways to get free help getting your tax return filed. Again, we've got VITA programs through the IRS, AARP, Baker Ripley, Entergy Texas. You can see more about all of those. You go to irs.gov. We've also got links on fox26houston.com. And again, if your adjusted gross income is $73,000 a year or less, you can do free file. And that means that you have free access to software to file your taxes. And that really, either one of these really will help to ensure that you are getting all of the credits that you are qualified for. If you had any problems with your child tax credit payments or anything like that this year, these are great resources, again, that are available to get your questions answered and hopefully make sure that you get those taxes done. If you have any other questions or just want to look up some more information, this, by the way, is I have a page on fox26houston.com, Sullivan Smart Sense. You can go there. You can go to my Facebook page, Heather Sullivan Fox 26. I have, lots of articles that I've been doing for the last couple of years. So if you're looking to find lots of resources there that you can check out, or you can always send questions about things that you want to have answered. And lastly, what I want to talk about is you do, as Ed was just saying, you really do want to file your tax return early, not only to make sure that you have plenty of time to get it done and that you get your refund, but also because identity theft has grown enormously during the pandemic. And what's happening is the identity thieves will file your tax return for you, and they'll get your money, and then you have a big mess. And so the sooner you file, that's one way of cutting down on somebody who may already have all of your information. We've had so many data breaches that the reality is that all of our names and our social security numbers and addresses and all of that information is pretty much out there for most people. So you want to file your tax return as soon as you can so that a thief is not filing it for you. It helps to cut down on that identity theft. We hope that we've answered your questions. Thanks so much for joining us today. We will be back again with more tips on how to save money and how to make ends meet. Thanks for being with us on Sullivan Smart Sense, and we'll see you next time.